In the last few months, NSE shares have been trending heavily in the unlisted market. They're currently trading at around rupees 2,400 per share. That's nearly a 60% jump from just a month ago when they were available for 1,500, and more than 300% in the last 5 years when it was trading at 740 rupees in 2021. This surge is primarily driven by growing retail investors' interest in unlisted shares and possible IPO hope in the coming months. Now, is it just hype, or is there real strength behind? And more importantly, at 2,400 rupees, is it still a good investment, or is it too late? In this video, we'll cover what's driving this growth, how NSE's near-monopoly business model works, its financial performance and fair valuation estimates, where the share price could go over the next 5 years, and finally, whether or not you should invest now. Now, NSE isn't just another business, it's a financial powerhouse, and it literally runs the stock market. It's where India's largest institutions, mutual funds, insurance companies, even the government comes to raise capital and trade securities. How India's largest exchange makes money. The National Stock Exchange, NSE, is India's largest financial ecosystem. This multi-asset platform, offering services like trading in cash, derivatives, commodities, and currency, clearing and settlement via NSE Clearing Corporation, IPO listing services and index management. 5. Data licensing. 6. Co-location and technology services. Think of NSE like a giant toll plaza on India's financial expressway. Every single trade you take, whether you buy Reliance shares, a bond, or Nifty options, it passes through NSE, and NSE collects a small fee. With over 22 crore active investor accounts and 93% market share in derivatives, those small fees add up to billions of rupees in revenue. Majority of the revenue comes from transaction charges, which stands at 67%. It's like a broker's brokerage, but for every trade. Index licensing and data fees. Have you ever seen a Bloomberg terminal and TradingView terminal? NSE sells the market data to these companies, and index licensing from Nifty 50. Listing fees. When companies file IPOs, they have to pay small fee to the NSE. And finally, connectivity and colocation rentals for high-frequency traders. And even income from investments, because NSE sits on a massive cash corpus. And you've got a business that earns in every market condition. Let's see the numbers behind the dominance. Over the last 5 years, NSE has delivered exceptional growth, not just in revenue, but in profitability, margins, and returns. In FY21, NSE made 6,830 crores in revenue. By FY25, that number has nearly tripled to 19,177 crores. Profits followed the same path, from 3,574 crores in FY21 to a massive 12,188 crores in FY25. And here's the kicker. Throughout this growth, NSE maintained EBITDA margins above 70% and PAT margins around 58%. That's world-class efficiency. Now you tell me, how many Indian companies show this kind of consistency? Let me highlight 2 things here. Their revenue has grown at a CAGR of 30%. Their PAT has grown nearly at 35% CAGR in 5 years. Dividends. NSE has been sharing this wealth with shareholders via dividends. Over the past 5 years, NSE has consistently paid out healthy and rising dividends, year after year. If you look at what they have paid, in FY21, NSE paid a dividend of 24.75 rupees per share, returning about 2,475 crores of profit to its shareholders. Fast forward to FY25, that number more than doubled, with a payout of 35 rupees per share and a total dividend of 6,250 crore. Remember, this dividend is after post-bonus issue. That's close to 26% CAGR in dividends and gave 5-6% dividend yield over this period, which is far better than bank FDs. Let's now compare NSE with its Indian peers and also see how it competes with global gains. In India, the only listed peer of significance is BSE and a niche exchange like IX. But NSE operates in an entirely different league, both in size and profitability. NSE is nearly 6 times more profitable than BSE and has over 90% market share in both cash and F&O segments. And yet, it trades at a far more reasonable PE ratio of 46 compared to BSE's inflated 80 times PE, largely driven by temporary F&O re-rating. Let's compare NSE with some of the global exchanges like New York Stock Exchange, Nasdaq, and London Stock Exchange. Let's start with EBITDA margins. NSE runs at a 71% EBITDA margin, That's significantly higher than Nasdaq at 41%, London Stock Exchange at 34%, and even above Singapore Exchange, which sits at 57%. Only two exchanges are slightly ahead, Australia's ASX at 75% and HKX at 73%. But for a developing market exchange, NSE is punching well above its weight. Now look at return on equity, or ROE. This is where NSE truly dominates. With an ROE of 35%, it leads the global pack. Higher than Singapore Exchange at 31%, Hong Kong Exchange at 23%, and way above Nasdaq and ASX, which are barely in the 10-13% range. And the London Stock Exchange, just 7%. So when it comes to capital efficiency, margins, and return on equity, NSE outperforms most of the global exchanges. You might wonder, if NSE is so profitable, why it is not yet listed? Well, it's a story of regulatory drama and legal battles. Here's the story: IPO history and roadblocks. In 2016, NSE filed its initial IPO papers. But the process hit a wall when SEBI began investigating a major issue: the infamous co-location scam, where select traders were allegedly given faster access to NSE's servers, something that gave them an unfair edge over others. In 2019, after years of investigation, SEBI imposed a hefty 1,000 crores penalty on NSE for violations linked to this case. Then in 2022, NSE began damage control. It paid 643 crores to settle software access and data misuse issues. Recent developments: between 2023 and 2025, the real cleanup began. NSE offered a fresh 1,388 crores settlement to SEBI, including 1,165 crores for co-location and 223 crores for dark fiber misuse. This was one of the largest regulatory settlements in India's capital markets history. SEBI has accepted NSE's consent applications and said legacy clearing separation rules are no longer an obstacle. SEBI Chair Tuhin Kantapande went on record saying there's no obstacle remaining in NSE's IPO path, which is a big positive news. As per latest media reports, NSE is preparing to refile its DRHP by late July 2025 and aims to list publicly by Q4 of FY26. In short, the compliance process is in its final leg. NSE and SEBI are now working closely to close any pending formalities. Now comes the big question: what could NSE be worth at listing? Let's break it down using some simple but powerful valuation math. Valuation scenarios. If we take a base case at the PE of 35 times, which is conservative by global standards, here's what we get. In base case valuation, multiply 12,188 crores with 35. We get 4.26 lakh crore rupees market cap, which will put NSE price in the range of 1,715 to 1,950 rupees per share. In bull case, if NSE lists at PE of 50 times or higher, targeting BSE valuation, you could see prices well above 2,500 rupees per share. Now let's look at multiple valuation cases based on market expectations on the screen. Conclusion: if NSE lists between 1,500 to 2,000 range, and PE expands to 50 to 60 times due to retail inflows, and ETFs, a 50 to 80% upside is clearly possible. Here's what we expect post-listing. Mutual funds, PMS, AIFs will start buying heavily. Because currently most of them not allowed to hold unlisted equity, NSE will likely be added to the Nifty 50, Sensex, MSCI, and global ETFs. Strong retail growth. India is adding 3 to 4 crore Demat accounts every year. NSE has grown PAT at 33% CAGR. Even if it grows at 18-20% CAGR for next 10 years, this becomes a multi-bagger. Now let's take a step forward. Let's say NSE gets listed around 2,000 to 2,300 rupees per share. What happens after that? What kind of returns can be expected over the next 5-6 years? If you believe NSE continues to grow its profits at a conservative 18% per year, which it has historically, then by FY30, its profit could rise to nearly 28,000 crores. Apply a 45 PE ratio. That gives us a target valuation of 12.5 lakh crores and a share price of around 5,085 rupees. Now let's say you entered at 2,000 per share. Your capital could more than double in 6 years at nearly 17% CAGR. But now, let's imagine the bull case. India's growth accelerates, more retail money flows into the market, and NSE rides the wave with 24% CAGR. In that case, profit after tax hits rupees 35,700 crore by FY30, and NSE's value, around 6,500 rupees per share. That's over 3 times return from today's price. And the important thing here, this projection is based on a 45 PE multiple, which is reasonable for a high-margin dominant business like NSE. But if the market gives it a premium like BSE, which is trading at around 80 PE, your returns could jump 1.5 to 2 times higher from above-mentioned prices. But let me be honest, there are risks. Now before we wrap up, let's talk about the risks. Because every opportunity, no matter how strong, has its blind spots. Illiquidity. NSE is still unlisted. That means you can't just sell it any day like a regular stock. You need a buyer, and exits can take time. Regulatory overhang. Yes, SEBI has cleared major hurdles, but the co-location case is still pending in the Supreme Court, and any fresh order can bring headline risk. SEBI derivatives. Reform. There's growing concern that SEBI might tighten norms around retail F&O participation. If that happens, trading volumes could drop, impacting NSE's top line. BSE competition. BSE is catching up in weekly options, now holding nearly 25 to 30% market share in expiries. That's pressure on NSE's once untouchable dominance. That's why we always say, invest only via verified platforms, and ideally not more than 10-15% of your high-risk capital. If you believe in India's financial growth, and if you believe that more Indians will invest in stocks, mutual funds, SIPs, ETFs in coming years, then NSE is the core infrastructure of that growth. If you are interested to enter pre-IPO NSE, contact us for pricing, documentation, help, and verified platforms.